Thank you for joining us today. I've got three distinguished VCs with me, and we're going to encourage them to debate each other and throw dirt on each other. Now, I'm based in Beijing. I cover tech for the FT, and the big buzzword at the moment for all the Chinese VCs is how they can get overseas, make investments in the US and Southeast Asia. What does that look like for a Chinese VC kind of going global, as it were? Thomas, do you have a perspective on that?
I do, and it's great to be here. Thank you. You go by Ellie, right?
Yes, yeah.
Ellie, thank you for that question. And I think at Gobi, I think we were one of the earlier China-based VCs to Chuhai. And I think, you know, when we opened up our first international office, it was in Singapore in 2010. And Ellie, I think if you remember, I think all the VCs at that time were trying to connect China to the US. So it was very much a kind of east to west strategy. That's right. Ian can talk about that.
Well, what we call about copy from the US and copy from China.
Yeah. It was like a C2C, copy to China. We took what was working in Silicon Valley. And I think, at least at Gobi, we were kind of one of the earlier guys. Together with Roderick, we saw an opportunity in Southeast Asia. So we were more focused on building kind of connectivity from Northeast Asia, China, Korea, Japan, to Southeast Asia. And at the time, you know, everybody was trying to do east to west. We decided to go north to south, and we gave that a catchy term. We called it Crouching Panda, Hidden Tapir.
Okay. Very catchy.
You know, 卧虎藏龙, but it never really caught on, Ellie, so I'm hoping you can maybe write about it one day. And so that's kind of our journey. We started off in Singapore, and then we accelerated that. I moved my whole family out from Shanghai to Kuala Lumpur in 2015.
And how important was you physically relocating, do you think?
I thought it was very important. I think, you know, one of the reasons I wasn't even supposed to be there. By the way, it's 9 years later, and I'm still in Kuala Lumpur. I was only supposed to be there for 1 year. And, you know, we believed in the strategy, and at the time, it wasn't happening fast enough. And I think for a lot of the founders out there, you know exactly what I'm talking about. Sometimes when you want to get stuff done, you just got to physically get out there. And so, I mean, Southeast Asia we thought was important enough. I actually offered it to younger colleagues, but nobody in Shanghai wanted to go back then. This is 2015, and they would look at me, they're like, oh, what am I going to do about my kids' education? You know, it's not as advanced like Shanghai. And then finally, the younger guys one day said, hey, if you like Southeast Asia so much, why don't you go? And so I said, oh, all right. So I went, and you know, 1 year turned into 9.
Fair enough. There is an abundance of research that shows portfolio companies perform better when their VCs have got a strong network in the country. Ian, you also had experience in Southeast Asia and kind of retreated a few years ago. What did that look like, and what did you learn?
Yeah, so same with Tom. I went from China to Southeast Asia, but for me it was, in a way, after 10 years in China, 15 years in China, going home to Southeast Asia. But the problem for us, we did it through what we call copy from China, trying to bring guys like Meituan, guys like Mobile, and come into Southeast Asia to build businesses. The idea is, you know, they can get from 0 to 1 in very quickly because they've done it before. But our experience is that, you know, the ecosystem there is very different. We're among friends and peers here. You really need to know how to, not only just to build the app, build the platform, but how do you navigate where there's regulations, the families, the businesses there. So for a lot of the Chinese entrepreneurs that we bring to Southeast Asia, they couldn't get beyond that hump. So I think in 2018-19, we decided that, you know, as far as Chuhai is concerned, we had to rethink that strategy. You know, instead of a light business model where you bring talents to Southeast Asia, since 2018, we are looking at bringing supply chain from China to a global market. So whether it's, you know, warehouse robotics, whether it's consumer electronics, these companies we see are no, really scaling up as we speak. So I mean, 20 years ago, when we were looking at venture, we all looking at what works in the US and try to replicate in China. There was a Google, there's a Baidu, there was a Groupon, there's a Meituan. But you know, the last 5 years, post-COVID, every entrepreneur we meet today in our offices in Shanghai and Beijing, they are looking at the global market. They're not contented just being a Chinese company, they're looking at a global presence. So targeting the US, the Europe, pretty much the global market.
Yeah, absolutely. Roderick, could you make a pitch for why the LPs should be going for Southeast Asia-based or originated funds rather than kind of people that are coming in later?
Yeah, I mean, for us it might be a little bit different angle, right? I think our firm started in 2009, and we started very small in Indonesia, right? We started from a local player, and then I think we grew more regionally as well. Today we operate in Southeast Asia. We have 2 offices, Jakarta and Singapore. We do work very closely with a lot of other VCs as well, right? And I think we do believe, right? I think there are certain uniqueness of being local and whatnot, but the premise is, especially for tech investments as well, is you can't do it yourself. You have to work with other people. So the idea is for other people who wants to work in the region for us is to come in and work with us as well, right? Because in the cap table for any startups, you see multiple investors at any given point as well, right? So for us, we are also lucky that I think as a region, Southeast Asia has been getting sort of good, positive sort of exposure, right, over the years as well. So yeah, I think the idea is for us, we start off local, and then for us too, we are venturing out. I think we have a new partnership in Korea, but for that as well, we're doing a partnership with a local firm, right? So I think the model is also when we go to an area that we might not have the network or the capabilities, we might work with somebody local for that.
Why Korea?
I think Korea has been in our mind for a long time. For us, we've always had a good relationship with Japan. When we started off, we have a sister fund in Japan as well, but we've never really been able to tap into Korea. There's been a lot of interest from Korean businesses as well into Southeast Asia, but we do think there are specific verticals that Korea are good at in technology that we can leverage or work with. Future mobility, biotech, healthcare, beauty, retail, entertainment especially, right? So these areas are interesting ones that we want to tap into or work through as well. So this is sort of our first attempt of going outside of Southeast Asia. So we'll see how it goes, but yeah, I think it's...
And what about the exit environment in Indonesia? I think a lot of people have been looking around the world and trying to find the next China, the next kind of confluence of the rise of the middle class coming together with the explosion of technological adoption, and it's not really happened in the same way in any other markets to the kind of same frenzied degree. What does that look like from Indonesia's perspective?
Yeah, I mean, I think that's probably one of the single biggest question for LPs or investors as well. They're looking at Southeast Asia market, right? I think exits or the lack thereof so far, I think has been one of the challenges, I guess, right? I think IPO, which is the holy grail, which everybody wants to do, there has been a few tech companies that's gone public, but unfortunately post-IPO performance has not been as expected. So I think that hasn't helped. So we do think that there has been a lot of reform as well though, right? The Indonesian government and the stock exchange have changed regulation to allow for startups and companies to be able to IPO. We now are able to do multiple voting shares. We can do multiple rights issuance. You can be not profitable for longer to IPO in Indonesia. So there are push and support from the government and the exchanges itself. But ultimately, it might take a little bit more time for that to develop. So what we do believe is probably what will develop first is the M&A space, I guess, or scene, right? I think a lot of larger companies are looking at Southeast Asia as a market, and they're also looking at startups or companies there and want to maybe fast track some of their development, and I think acquisition could be a good way to do that.
Who are the potential acquirers? Is it Indonesian kind of large conglomerates, or is it foreign companies that are trying to enter the Indonesian market, or a mixture of both?
Well, potentially all of the above. I think the conglomerates are not necessarily historically willing to pay up for acquisition, or a lot of them have the mentality of trying to do it themselves. And probably at some point, if they fail enough times, they will probably just acquire, but it will take time. I think the multinationals have looked at that. There's been a few larger tech companies in the region with quite a bit of cash, like Grab, like C and whatnot, that has gone public. Their share price hasn't done that well as well, which I think they might start looking into inorganic more as well, right?
Okay.
So,
Thomas, do you have a perspective on this, being in Kale?
Yeah, no, I think it's interesting that you mentioned that, and I think the purpose of these events, like Beyond and the Origin Conference here, Ellie, as you know, is these are great meeting places, and when you get a lot of smart people in a room together, interesting ideas start getting tossed around. You know, I wouldn't be surprised if there are meetings going on right now between founders of companies, and the discussions that are happening now may be the seeds of the headlines for tomorrow that you may be reporting about. So I would just tell everybody in the audience to stay tuned. I mean, the Southeast Asia tech venture ecosystem is relatively young. And I think there have been some lessons learned, particularly, I think, regarding, let's say, Grab and Gojek. I think you may be pleasantly surprised by the activity that may show up 6, 12 months from now. Mm-hmm. And maybe some of the seeds are being planted right here at this conference.
It's always dangerous to tease a journalist like this. Ian, what are you seeing in the China market at the moment?
Well, I've been in the venture industry for 20 plus years. This is probably for an GP, the hardest, the worst time to fundraise. And I don't think it will get any better, at least for the next 2 cycles. And added to that, this is probably the worst exit market that we've seen for the last 20 plus years as well. I think the only silver lining in that is that the public market is opening up slowly. I mean, without giving secrets away, we're going to see some exits happening either in Hong Kong, in the US, from China in the next 2 quarters. I mean, including some that we are also investors. So I think that's opening out. But as far as fundraising is concerned, as a GP from China, that's going to be difficult.
I keep hearing from Chinese investors as well, because they have a far less diversified base of investors that they can go to. I mean, the US guys have gone. A lot of the Chinese VC guys don't have money. They're having to put up with terms that, you know, they would never have accepted many years ago, and for sure their US counterparts don't accept. But is that an opportunity for Chinese VCs?
I think I hear where you come from, whether it's you're raising for RMB fund, or let's say if you're raising money from Middle East, there is always a strategic angle there. And strategic to them, rightly speaking, is more important than a financial return. So I think every GP who is looking at raising from those investors, I'm saying they're great investors, but you have to balance that this is going to be strategic, and whether you are able to give that 9 yards of stuff for them, whether it's bringing companies over to Saudi, or whether convincing one of your portfolio companies to bring a manufacturing line all the way to UAE. So I think every GP who's looking to raise dollars or raise RMB fund would have to make that decision on their own.
Thomas, what about the crouching panda or hidden dragon? I forget which.
Top here.
What are you seeing in China? Are you making any investments recently?
Again, we're contrarians. We have, we've been investing heavily in the Greater Bay Area and in Hong Kong through our GBA fund and through kind of our Hong Kong fund. As you know, we're very fortunate to be managing the Alibaba Entrepreneurs Fund and then the AEF GBA Fund. And I think, again, I've known Ian and Roderick for a long time. Look, I think one of the things you learn when you've been in investing long enough is when everybody's negative, when everybody says, oh man, the sky is falling, it's the best time to be deploying. And we have found that to be the case in China. Broadly speaking, we feel that the activity in China is shifting from kind of, phase 1 was Beijing, phase 2 was kind of Shanghai. We feel that phase 3 is happening in the GBA, the Greater Bay Area. So within China, we're seeing a lot of opportunity. Well, I just think, from a national government policy perspective, I mean, there's an old saying, right, in capital markets, never bet against the Fed. That's if you're investing in U.S. Public equities. And I think in China is read the 5-year plan. I mean, it's like you get all the answers to the test. And the 5-year plan says that China's going to develop out the Greater Bay Area. Macau is part of the Greater Bay Area. And, you know, I think, Ellie, you know what's going on here. For maybe some of the guests who don't know, the Greater Bay Area is China's attempt to create the world's first megalopolis. That's a super city. They're trying to take, you know, the financial hub of a New York, combine that with the VC ecosystem of San Francisco, combine that with the universities in Boston, combine that with the entertainment hub of Vegas, and the manufacturing ability of old Detroit, and put that into one city. Could you imagine that? That's GBA. That's exactly what they're trying to do now. That's exciting for us. And we've been investing in China. Again, US dollar fund. It hasn't been easy, but I think the valuations for Chinese startups now, a little bit more reasonable than a couple of years ago. And we still remain fairly excited by the prospects.
I can add on that in the sense that even before the GPA became an initiative from the government, Shenzhen has been a hotbed of cross-border e-commerce since eBay came to town. eBay, Amazon, they have trained these cross-border sellers to be able to build products, marketing, distribution on Amazon, eBay, you know, Wish, and now TikTok Shop, and even their own websites. And we're seeing a lot of companies here bring innovations. They're not just, you know, cheap jeans, tank tops. They're talking about, you know, we have 10 companies in Shenzhen all trying to roll out the next autonomous lawnmower. You know, 5 or 6 companies from Shenzhen trying to build the next autonomous swimming pool cleaners. All right, so that is huge, and that's just an indication of what's coming out. And we are looking at innovations not only from DJI, you know, instant camera, and so on and so forth. All aspects of that coming out from Shenzhen and the Greater Bay Area. So that is a great pool of entrepreneurs, talents, and supply chain that is helping them to go out.
Yeah. There are teenagers all across the United States who are very excited for a robotic lawnmower to come into existence. But 10 of them, I mean, this is another issue, right? When there's a specific sector that's been highlighted, right now everyone's talking about e-vehicles as being a very attractive sector because it just received policy support from Beijing. Money rushes in, and then there's just incredibly aggressive price war. How do you kind of, obviously this happens everywhere, but it seems to be kind of uniquely difficult in China given the way people read the tea leaves of regulatory support and the environment. Where does that leave you as the VC?
I mean, what you just described, meaning too much funding, overcapacity, overproduction. I think that has happened in the VC area in many cycles. Tom knows about it. You know, when Groupon came along, there were thousands wannabe trying to become Meituans. So that's been a cycle of venture in China. So I think we'll go through that. We'll go through that oversupply, you know, the mountains of, you know, bike-sharing companies in China, mountains of bikes, you know, we'll go through that. There's always that ups and that is the downs. So I think we'll figure it out. And it's a process of the market and a process of government regulations catching up with the market.
Roderick, do you get these very clear policy signals from Indonesia as you do in China? I mean, everyone says you should read the 5-year plan and then that gives you a fairly good investment strategy. Do you have the same kind of clarity from Indonesia?
Probably not to the extent that China does it, I guess, right? But I think, you know, Indonesia is a growing democracy. We just had our election, presidential election early this year. Relatively pretty straightforward, I guess, right? We're going to have a new president come October. I think the government has been relatively supportive, I guess, of the tech ecosystem in Indonesia. Is it as easy to read what they are planning or what they want to do? There's been always instances too, right, that there's surprises and whatnot. But I think in general, it's been relatively positive. But the government is also not extreme, like, you know, like whether maybe China or India to a certain extent, right, where there's a certain degree of protectionism or whatnot, right, for local players. But in general, for us as well, I think we've had good communication also with the government, and I think in Indonesia, it's pretty straightforward so far.
And in your conversations with LPs, to what extent does the democratic environment, the fact that there are changes to the government impact their kind of willingness to invest? They see it as a political risk or a positive factor?
I think, of course, there's always a consideration around political situation as well, right? I think in the past maybe 10, 15 years, Indonesia has been relatively stable politically, right? Regionally, it's quite interesting. I think this is an interesting year for Southeast Asia because a lot of the countries either just had a new leader or will have a new leader. The latest one being Singapore, they changed their prime minister, maybe pretty much similar things, but Indonesia will have a new president in October. Philippines had a new president last year. Vietnam is going through another president maybe. Malaysia had a new prime minister, 6th or 7th in the past some years, but...
that's a little high, but yeah.
Yeah, but... Not as many as the UK.
Yes. So, but I think there are considerations, of course, from LPs. Even when we were talking to them late last year, you know, they were like, okay, how's the election going to be? Which direction it's going to be? Who's going to be the next president? So there might be consideration when they want to deploy capital as well from LPs. They say, okay, can we wait, or we want to wait until we know the clarity of who's going to be the next president, or what policy? Is it going to be continuation? Is it going to be reversal? Is it going to be a different sort of priorities as well, right? So, but at least for us, now that a majority of that is over, so we're just waiting, and I think so far the indication that it's mostly continuation rather than not, so it seems like it should be okay.
Thomas, do you have a perspective on that, kind of going from China to Southeast Asia, on the entering from a political regime which is very much stable and you know who's going to be in power in the next few years to operating in a democracy?
Yeah, I mean, I think we get asked this question quite a bit. It's just, you know, how does political risk affect our investment strategy? And the answer for us has been quite consistent. It's just like, look, it's like the weather, right? The political situation for every one of us is just something you have to deal with. Sometimes it's going to rain. Well, you make sure you have an umbrella. And for us, I think, since we're early stage investors, we're really talking about 10-year cycles. And so, you know, there are certain people who may be affected by the short-term headlines, but we're really looking at kind of these powerful long-term trends that in most cases are irreversible. So yeah, the political situation may change, but when you look at broadly what's going on in Asia, I mean, look, Asia is making improvements. I mean, would we all agree? I mean, you look at China today versus China 20 years ago, I mean, the direction is it's making progress. When you look at Southeast Asia, I mean, I remember, I mean, that's why I don't have any more hair. I mean, Indonesia 20 years ago was not the most politically stable, right? I mean, it went from, you know, being a very kind of like nobody, well, not nobody, but less people were attracted to becoming one of the, you know, benchmarks, right? And so I think you know, political situation changes, but I'm an optimist. I guess that's why I'm in the VC business. I'm a glass half full type of person. And when you look at the broad trends of what's going on in Asia, you're seeing slow but steady kind of upward, irreversible progress. I'll give you another example. Gobi, we're an investor in Pakistan. In fact, we have a lot of our Pakistan founders. They're in the back. Oh, I see Niall there, some of our founders. And look, I mean, Ellie, if I say Pakistan, do you think venture capital as the first term that comes to mind?
Not necessarily.
Right.
Although, could you introduce, what's the company do now?
Say, hey, Niall, who's there? Who do we have? We have Omer, right, from Abi. They're doing earned wage access, trying to extend more credit to local Pakistanis, right? So they're kind of learning from what happened in China, what happened in Southeast Asia, and Indonesia, and now bringing that to Pakistan. We have a company that's, here's a statistic that's going to blow your mind. Ready? In Hong Kong, how many of you guys have a mortgage? You'll raise your hand, right? When you buy a house, you go for a mortgage, right? In Pakistan, they don't have mortgages. So most people will look at that and go, wow, that's a challenge. We choose to see that as, wow, that's an opportunity. How do people buy houses there? Someone's going to have to lend them money.
Do you guys have mortgages? No, just fact checking over here.
They're buying cash, right? You're buying, see, Omer's buying in cash.
There we go.
Yeah. So when we look at this, I'm just hopeful. I really think that the longer term trend, and yeah, the headlines are scary. I mean, Roderick hasn't even mentioned the scariest election that's about to happen. And that's the one in November in the US. I mean, my goodness, how come nobody's talking about political risk there? Right? I mean, the US election looks a little...
It is the elephant in the room.
Right, so,
and,
yeah.
you know, as cross-border investors who are trying to tap into the network in China and the US, it's becoming increasingly difficult. I mean, how do you just navigate that, Ian? What does it look like? And I know a lot of the Chinese VCs I speak to are wanting to tap into the US market, but it's just getting more and more difficult.
Yeah, I have peers who are flying to the US, doing what I used to do in 2017-18 when I came to Southeast Asia to look at investments. But I think the political situation as we see today, and a lot of my peers are investing in AI SaaS, AI applications in the US, it's dicey. It's dicey. I think that's the best way I can describe it. For us, I think, you know, we know where our advantage is, given that, you know, we've done it in Southeast Asia. When you fly into a new environment, if you don't have local partners like East Ventures here, you know, first question, how do you do a reference check on an entrepreneur? All right, you know, I mean, he gives you a CV, you have no way to know whether it's bullshit or even real. All right, so, I wish all my peers the best of luck, but, you know, politics aside, whether you are able to get into the deals, the Drake teams, the Drake companies, without local partners like, you know, friends who are on the ground in the US or in this case, Indonesia, it will be difficult. It will be difficult.
I mean, I think a lot of the guys who are traveling to Bay Area, they just want to make sure that they're keeping in touch with how technology is developing there, especially on generative AI. It is being forged in by a few companies.
There is a push to do that because one, you know, if you look at SaaS, if you look at enterprise solution, China hasn't proven that to work yet. You know, there isn't that big of a pool of businesses to pay for SaaS. So if you look at the next wave of AI SaaS, the biggest market globally is the US.
Yeah, absolutely. And not to mention the fact they need NVIDIA GPUs. What's happening in the Indonesia AI sector? I don't hear much about this. Is that for a reason?
I think everybody's starting to look at AI, right? I think you have to, right? But I think we were talking about, like, you know, sort of the infrastructure chip, foundational model is probably the big boys game, I guess, right? I mean, you need a lot of resources, whether it's, you know, capital, whether it's the chips themselves, whether it's the human capital, right? So not much of that is really going on, I guess, in Indonesia at the moment, right? I think the application layer would be interesting at some point, but I think a lot of people are trying to figure that out in Indonesia, but probably not there yet. Although I think, you know, behind the scenes, I'm sure, and we're also looking at you know, what could be interesting in the AI space, but it might take a little bit of time before we start to see anything very meaningful from Indonesia for AI.
Okay. Thomas, do you have a perspective on either of those two topics? Chinese VCs in the US or what's going on in Southeast Asian AI?
Well, I think, first, I got viewpoints on both, so if you don't mind. I think Chinese VCs, it's getting tougher, right? I mean, I always say I'm an ABC, right? American-born Chinese. We're the least popular people right now. You're trusted by nobody, and it's kind of sad. This is what the world has become, and so you have to figure out, what's your value proposition. I would say to my friends in the Chinese VC industry is, you gotta, there's still a lot of hope out there, right? Yeah, the U.S. is kind of, it's a little colder now. It's not as warm as before from a reception standpoint. You know it's better than anybody. India is kind of off limits. South America is really far. So, I think that's why this panel is, Southeast Asia is right there, right? So, we are seeing, and you're seeing that activity. You're seeing that pickup in activity to Southeast Asia, and I think that will continue. Now, the first wave has been everybody went into Singapore, but I think as the Chinese investors get more familiar with the landscape, you're starting them see now go to Indonesia. Thailand was also a big one. But now you're starting to see them the second order, third order, right, which is going now to Malaysia, right, going into the Philippines. And these are big opportunities. And again, we're excited when you look at the third order, it's going to go to South Asia, countries like Pakistan. And again, from a political standpoint, China and Pakistan are fairly close. And that's a big market opportunity. So that's one. And then what was the second part?
We were talking about AI in Southeast Asia.
I think AI, the way we're looking at it is, I think Roderick's absolutely right. These like LLMs, where you're talking billion-dollar investments, I think that's probably left for the bigger boys to play. But within Gobi's portfolio, we have many companies that are AI-focused. And I'll give you one example. There's a company called Fano Labs, right? They're in RegTech. But they're now incorporating AI into what they're doing, and they're being used by all the financial institutions in Hong Kong. And now they're expanding out to Southeast Asia. In fact, one of our friends from Southeast Asia, Open Space, just invested into them. So I think that's an interesting example.
Okay, thank you. I think our time has come to an end, but I've been told by all these panelists that they're looking for investments. So feel free to pitch them. They are... shove their name cards in their hands, and I'm sure only good things can follow. But thank you so much for joining.
Okay, thank you. Thank you for wonderful sharing. Please have a rest. And now this morning's summit has come to an end. We will start at 2 o'clock this afternoon. Please come back on time. See you.